Good morning, ladies and gentlemen, and welcome to the iFX EXPO Dubai. I'm so excited to see you all here. Thank you for joining us this morning. My name is Rachel McIntosh, and I am a content creator and podcast host at Finance Magnates and Ultimate FinTech. And I'm so excited to announce our first panel of the day. We have an absolutely excellent group of leaders from across the industry to discuss a variety of topics. I'll introduce them briefly and I'll let them introduce themselves a bit more thoroughly in just a moment. But briefly, we have Mohamad Ibrahim, the Regional Director of Exness, Mohamad Ibrahim, Global Head of Brokerage Sales at Equity Group, Ingmar Mattus, Co-founder and Executive Director of Tickmill Group, Domluke Da Silva, CEO of HF Markets, and Dare Ferguson, CEO of a-changin. Let's give them a warm welcome to the stage. Hey guys, welcome. Glad to have you here. So first things first, I'd love to have you all talk a little bit about yourselves and the work that you do. So we'll start at the very end with Dare and come down the line.
Okay, great. Is that on? It is. Hi there, good morning everybody. My name is Dara Ferguson. I'm the CEO of a-changin. a-changin is one of the, I suppose, longest standing serving brokers within the industry. I joined Ava over 13 years ago. When we first set up in Ireland, we're regulated by the Central Bank of Ireland, and it's where our headquarters are. And we're regulated around the world in 9 jurisdictions currently, with a few more pending. And we'll keep you posted of that as and when they get updated.
Hello. Is it on? My name is Mohamad Ibrahim. I'm the global head of brokerage sales at Equity Group, and Equity Group is a multi-asset broker, and we are also regulated in about 7 different places in the world, and we have around 13 offices. We do have an outstanding lines of B2B and retail business, and I'm very happy to be speaking to you today and with these distinguished gentlemen. I hope it'll be nice.
Hi, so I'm Ingmar Mattus. I'm co-founder and executive director of Tickmill Group. So Tickmill Group is regulated by 5 different regulators around the world. We have close to 100,000 clients, and we are a multi-asset broker. So we have, besides FX CFDs, we have also futures and options, and that's been kind of our key development area over the last couple of years. Thank you.
Good morning, everyone. This is Mohamad Ibrahim. I'm the Regional Director of Exness. Exness is a multi-asset broker and a fintech company established in 2008. And last month, in January 2022, we had an all-time record, and I think we were the first retail broker to hit this number, trading volume of more than $1.5 trillion of our clients in one single month.
Good morning, everybody. My name is Domluke, CEO of HF Markets, DIFC. We're part of the HF Markets group that's also well known under the brand names of HF Markets and Hot Forex. We've been in Dubai for the past 3 years. The group has been in operation for the past 11 years. We've been very successfully globally. We've got about over 2.5 million live accounts opened. With around 15 to 16 offices globally, very well represented across Asia, growing strongly in Africa. We just received a license from the Kenyan CMA. We've got regulatory licenses in the UK FCA, South Africa, in the European Union, and as I mentioned earlier, in Dubai under the DFSA. Thank you.
Thank you all and welcome. So I'd like to start this discussion with kind of a big question, a big broad question, so feel free to answer in whatever way you'd like, which is, looking back on the last year, what are the trends or the moments, the things that happened that surprised you the most? And again, we'll go down the line. So Dare, you're on the spot.
Okay, where do you start with that question? I think if you're talking about the last year, you're really talking about the last 2 years. You kind of have to put them together.
True.
I mean, the world has changed in the last 2 years since COVID came in. Everything has gone online. Workplaces have been distorted and changed for good for the future. There's no more coming in working 9 to 5 in an office. You work remotely, you work anywhere. You can be regulated in 9 different jurisdictions. You can have employees working in different countries under each of those regulations. So the conformity that we are used to has been just changed for good. And it's not going to come back. And I think that's something that businesses very much have to get used to. As an employer, you have to get used to it. And you have to be very flexible with your staff, but also with your client base, because your client base in the exact same way have had a huge shift and change in dynamic in how they work, how they look at the markets. And just everything has become so tangible and so touchable that it's, if you're not on top of things and if you're not ready to react as soon as possible, or even before things happen, you're going to be left behind. And I know there's lots of interesting chats on technologies, which I think are going to be very exciting to see. I think the change in assets and what you offer to clients, that is ever evolving, and we see the evolution of crypto coming over and crypto exchanges, etc. I mean, we were actually one of the first brokers to ever offer Bitcoin as a CFD almost 10 years ago. Before anybody, I didn't even know about what it was, I think, when we put it online. But the world has just changed since then, and now if you are not putting that on your platform at the very first, and the next one that comes out, you're going to be left behind by other competitors, because it is a very competitive market, which is great, and it's great for business, but it's also great for clients, because clients can come out and they can look at the wide range of offering that is there for everybody, and they have choice. And when you give choice to clients, that's a great thing, because it's great for the industry to move forward and evolve.
I want to zoom in a bit on 2021, and I know it wasn't, if you take it in isolation, it wasn't a very eventful year for the industry, but I want to focus on one issue that kind of surprised me, which is gold. And we have seen a few big movements in gold in 2021, and the implications of these moves is what actually surprised me, because we have been witnessing a major short or lack of liquidity on gold. And we're still seeing these implications until today. Gold in our industry is becoming kind of the most demanded instrument globally, and we're having huge volumes coming into that space. But LPs and banks are really tightening their limits on gold, and this is a problem that is spilling from 2021 over to 2022. Aside from that, I see 2021 as he said, it was just a continuation of the COVID situations that happened in 2020.
So there were like a couple of interesting themes in 2021. So like talking about economics, for example. So at the beginning of 2021, if you look at the rate futures, for example, then whether Euribor, Eurodollar, Bank of England rates, etc., then literally nobody in the market was expecting any type of inflation coming forward. And if you look at the second part of the year, then the hot topic probably last year was the drastic rise of inflation and inflationary expectations. And for the brokerage industry, I think many of the people in the audience are from the brokerage space. So it was a very unusual year in that sense that the low volatility was there almost the whole year. And I know many brokers were suffering because we as a brokerage industry need volatility to make money. And actually the underlying clients as well, they generally get more active when there's volatility. And from the trading perspective, of course, what was very interesting is that you had these meme stocks coming into place. So GameStop, for example. And it created a lot of new traders, whether with Robinhood or other brokerage companies. And like I've been trading myself since 1997, and what I genuinely felt last year was that the level of experience of an average trader declined drastically last year. So people just picked up that something happened with GameStop or some other companies, and they jumped in. And this was a little bit concerning to me in that sense that most of these people, because they lack experience and so forth, they do not have any understanding what are the risks out there. And I think most of the people last year, even professional people, they forgot that the the key principle, the first most important principle of trading is actually preservation of capital. It is not jumping into GameStop, for example, when it's at 480 or with some other assets. And so professionally speaking, I was really surprised last year what I saw actually.
Thank you. So the gentleman approached this question from different aspects, and I agree on most of the things that they mentioned. I just want to add one thing. Our industry is a very unique industry, and it's one of the most dynamic and changing industries in the world. So we are prepared always that every 2 years, something specific to our industry will happen and will transform the whole industry. So surprise is our daily, let's say, daily routine. It's our daily work. We work with this kind of thing. And the other challenge we face in general in our industry is it's like a non-landing plane. So all the time you need to fix everything while you're flying. You cannot land and fix things. But what was different during the last couple of years is that the changes that happened and affected or made some kind of transformation in our industry was not industry specific, was global thing. Whether we're talking about the pandemic or we're talking about the rise of, you know, this virtual assets, the metaverse, the NFTs, all of these things. This time it wasn't industry specific, it was a global thing. It's transformed even everything we do in our normal life, not only in our industry. But the things that are industry specific, we're used to it. It happens every 2 or 3 years, something happens, transforms the whole industry. We are ready we are ready and prepared to adapt and, you know, to work in a way that this will not affect us negatively, even will affect us in a positive way.
For myself, Inga has mentioned that he's been trading for a long time, so I think another old school, probably dinosaur trader. I started trading probably in '95, and I thought I'd seen everything. But to answer the question directly, last year, the GameStop Reddit battle versus the hedge funds took me by surprise. I didn't expect to see that community coming together. Now, obviously, as a multi-asset broker, we have a large clientele base of retail clients as well as institutional. So we're fielding these questions. This was coming through, and it was quite interesting to watch. The other one was the supply side disruption on the macro end globally, leading to supply-driven inflation, and which is still affecting us now. For example, we see the cost of shipping a 40-foot container quadrupling in the past 1 year. That took me by surprise. The explosion of meme altcoins, the Dogecoins and the Shiba Inus of this world, again, was I think, at the height of irrational exuberance. But relating it back to our industry, because again, we have a pulse as a multi-asset broker on almost anything that trades. What interested me was the engagement, the participation by people who have never traded, who've never looked at economic charts or the stock market, but who got engaged, who got drawn into this industry. So it was a surprise, and it's something that I think that we and firms like us need to address and look at how do we move forward on.
Absolutely. So I think across the board, what I'm hearing is, you know, the need for flexibility, that there's so many new factors that have come into this industry. The death of the 9-to-5, you know, from a client and from a staff perspective, all these new kinds of assets, new kinds of traders, everything is changing. But I'd like to throw it back to you all and ask, you know, sort of see, what do you see are the trends that are forming out of all of these changes? And Mohamad, I'd like to direct this at you first. Yeah. Sorry, other Mohamad. Okay, yeah, go for it.
Yeah. So I would say for me, the most impressive thing was NFT. And I gotta admit, it took me a long time to really understand what NFT is. I'm sure I only understand maybe 30% of it until now. But we've seen NFTs coming out and making a huge wave in different forms like artwork or soundtracks or even real estate that you can buy and sell on the metaverse. And this is so surprising and amazing for us because it's like, you know, it's a parallel universe. But I don't have a clear idea on how NFTs will evolve over time and how they would integrate with different industries. But I would say even from our industry perspective, there are a lot of integration points that we can have. Just one example on the top of my head is trading personas. And we know how traders and money managers, they usually use these metrics of profitability, drawdowns, volumes, et cetera, kind of to define which is a good trader and bad trader. I can easily imagine a self-modifying NFT that embed all these metrics into a persona or an avatar that will change its design automatically according to these metrics, and then without having to read all of these stats, by just looking at the avatar of the trader, you'll be basically able to tell if this is a good trader, average trader, and a great trader. There's a lot to learn in that space, and I think there's a lot of integration points to our industry, and we yet to learn a lot. But it really has impressed me in the last year, to be honest.
Yeah, absolutely. And Ingmar, do you have something to add to that?
It was interesting year in that sense, and I'm looking at the trends. So what could we be seeing going forward? I think part of the year, I think what most brokers suffered with, somewhat like you could call it identity crisis, that most brokers out there, they kind of struggle that how are we able to compete with all these new crypto firms and so forth. And there was at some stage even a little bit of denial among industry participants. But I think all of us should kind of see the last year as an eye-opener in that sense that there is a completely new generation of traders out there. And I have to admit even myself that I was in denial at some stage whether we as a brokerage firm should even do 7 days trading for our clients. And I know based on the basis of statistics, for example, that the addition of Saturday or Sunday trading wouldn't add significantly to the volumes, but I'm having meetings, calls with the institutional firms out there, fund management companies and so forth. And even though maybe they wouldn't be trading over the weekend, then they would still want that ability to be there. And so the other theme, again, associated with cryptos, probably is that the firms need to focus on becoming really multi-asset. And that is not just like CFDs, FX, and equities. For sure, it's cryptos. I think everybody agrees with me. And further than that, so we as a firm, we consider our competitors Interactive Brokers, Saxo, and similar firms. So that was one of the reasons why we went even further when it comes to multi-asset, and we launched futures and options. And those of you who don't know statistics, for example, then we as a firm will probably not make any money with futures and options for the next 5 years. But it's a long-term project for us, and the expectation of underlying clients is that the brokerage firm that the client uses should be really multi-asset. And there is one thing that we should learn from last year is that the sooner you kind of stop denying these things, the better for the firm.
Absolutely. And Mohamad Ibrahim, do you have anything to add?
Yeah, thank you. Actually, Mohammed took the question and the answer. I agree with him regarding the raise of the NFPs and this whole new, let's say, if you want to call it a parallel world. And this is a challenge for traditional brokers to be able to adapt and change. Now, in Exness, we currently now, on the time being, working as a multi-asset broker, and more than 60% of our trading volume is non-FX. And a big percentage of it is based on crypto and crypto-related assets. So we're almost prepared, and we're there. But the most impressive thing from my side is that as a company or as a broker, being able to be the first broker hitting the 1 trillion trading volume a month as a record, and then after 2 or 3 months to hit the 1.5 That was the most impressive thing I've seen in the whole industry.
Yes. So I'd like to kind of take this towards this NFT direction, just because it seems like it's something that's coming up. I'm curious, like, how do you all see the forex industry, the industry that we're here working in and representing today, sort of fitting into this idea of like the metaverse, like with crypto and all these things, Web3? Is that like, do you think that this is an important element of the future of this industry, and how will that manifest itself? Go for it.
I think what's happening is a paradigm shift in this space, and NFT is just a subset of what we call the tokens, and I think what's really interesting, if we just take a step back and look at the forest from the trees, the really exciting event that's happening is the growth of DeFi, decentralized finance. And some would go as far as to say, I know we're in a fintech conference, but some would go as far as saying that DeFi is a new form of financial architecture, and it's not really fintech, because fintech is really providing intermediary services. Yeah. So for example, the NFTs have been mentioned here. I remember I've got two daughters. Both of them are into digital art. I think it was maybe 4, 5, 6 months back. When I read an article about this new animal called NFTs, and I said, hey, you guys, check it out. Maybe you can make a bit of fun, have a bit of fun. I didn't even think about making money. 6 months down the road, anyone wants to take a guess of what the volume of NFT art sales have been the past 1 year? Depending on what you read, it could be around $45 billion to $60 billion. Anyone wants to guess what the conventional art market was in 2020? $50 billion. So in 1 year, this has come from zero to right there at the top. Now, is it a fad? Or is it just another bubble? We can discount that or not, but I think what's happening is that digital assets are here to stay. The shift to DeFi and I think more importantly, tokenization is what we need to look at. Yeah. Tokenization of securities, of the access that this instrument is providing to small investors and large ones to get the ability to trade previously illiquid assets, to get fractional ownership of aircraft or real estate, and then this creation, and again, I think what you should mention is that transaction costs and speed of execution being on this platform of peer-to-peer is going to really be a challenge and probably cause the disintermediation to banks, brokers, and exchanges. So that's something that I think every firm needs to have a strategy on in terms of this industry.
Absolutely. And Dara, I'd like to ask for your perspective on this as well, particularly as it pertains to social trading and those kind of tools. How have you seen this shift toward DeFi, towards digital assets reflected in the social trading world?
Yeah, I mean, I think it comes back to something that we mentioned in the very first question. Somebody mentioned Reddit and what happened in 2021. And really what the industry has shifted to is it's the power of the people. And people and individuals and not hedge funds are shaping the change in the market. And this is something that brokers have to learn very, very quickly to adapt to. I mean, you can have the best technology in the world, but if nobody wants it, it's no good to you. And we learned that. We built an FX options platform which was, better than anything else in the market, and nobody trades in it. Yeah. And we're trying to learn what the market wants and how to adapt to it. That's what happened with Bitcoin back 6, 7 years ago. It came in, people didn't really know what it was, but you had to be very quickly to adapt to it. You had to get it on your platform, and you had to learn on the run. We're doing a little bit of that with NFTs at the minute. We don't really know what it is, but we have to figure it out very, very quickly because somebody out there wants it. And if you're not offering it, they'll go and find somebody that is offering it, that does understand it. Disney just appointed a vice president to look into the metaverse. They don't know what it is, but they know it's important enough to appoint somebody at a top level to go and figure it out and come back with a strategy plan. That's what we have to do. That's what all of our brokers have to do. We need to look at what's coming in the market. Try to predict. You can't really predict when you don't know what it is, but you have to try and unravel, piece it back and say, okay, how can I package this for my client base to come and offer them the tools that they want to? And there are great technology providers out there that we will partner with because we don't know how to do it ourselves. And we will link in with those and develop and scale up. And that's how you will meet the needs of your client base going forward. So it's exciting times ahead.
Certainly.
You
Mohamad,
wanna
go ahead.
No, you go first.
Thank you. I just want to say quickly that I 100% agree with him, but I found out with equity, we sat down and we everyone is trying to brainstorm and figure out how to integrate these new and new interesting things into our industry, and then we found out that the people in that room, us who are been doing FX and CFDs for 20 years, maybe are not the right people to actually do this, and we eventually thought maybe this should be something on the side, adjacent to our main activities, because you need a completely different set of skills for this. We barely even understand the NFT world and the DeFi world. We try and we learn and we read, but some people are truly embedded in it and they've been following it from the start. And I think what we need to do is be able to kind of isolate this, not in complete isolation, but try and build something on the side and then try to integrate it within our industry by having different people running both sides.
Yeah, I somewhat agree with you. And if I look back at our discussions internally at Tickmill, then like I said, as to the first question, then somewhat last year and the year before was a year when some firms maybe lost a little bit of focus, and let me explain. So if you're a regulated firm, you provide CFDs, FX, then that's our core business, and you shouldn't actually lose focus on that. What we've had, like as part of our some of the discussions have been that. Should we launch a completely separate crypto firm, for example, even maybe name it differently than Tickmill? And oftentimes I use a benchmark, like I'm thinking, what would TD Ameritrade do, or what would Interactive Brokers do, or what would Schwab do in the US, for example? And the interest of our clients, our existing clients, is that whatever we do at Tickmill would benefit the existing clients as number one priority. And another perspective that I would like to share is that some of the competitors in the FX space that we have or had in the past, they started at some stage focusing on crypto assets and almost entirely lost focus on CFDs and FX. And I think it's the wrong way, and let me explain to you. So if you take the biggest crypto firms out there, Coinbase, for example, or Crypto.com, then they are actually entering into our space. And it's much more difficult for them to enter our space because it's highly regulated space. So what I'm trying to say to the audience is that let's continue building our business, but also embrace the new technologies and innovation, and add these new products to our existing business and to enable them also to our existing client base, because we can't go back, we always have to go forward. And just by looking at Coinbase or Crypto.com, they've recently acquired US futures exchanges. They are going into our space. And the reason why they are doing it is that, yes, there are a lot of people out there who want to trade cryptos, but all of these people, I guarantee you, also want to trade the stock of Tesla. They want to maybe take advantage of the rise of British pound or take a position in index, for example. And these are highly regulated services where we today already operate. So I think that's our strength, actually, when we compare ourselves to the firms that just offer crypto, because it takes years to get proper regulation. And even in crypto space, so those firms who are only in crypto space, and we can tell it from our reflections from the European market when ESMA rules kicked in. So the way forward to have maybe additional competitive advantage if you are a crypto firm is to add leverage to the products. And I mean, Exness is a good example. So they have decent leverage on crypto products, and that's what clients want, you know. But the moment a crypto firm starts adding leverage to their crypto products, it's already a regulated financial product. So they need, it's not us that need to go into their space, it's them that need to come to our space. And when they come, I mean, we're all very powerful, large firms. I strongly want to see how they are going to compete with us.
Is it a competition, though? I wonder, you know, is that the spirit, or are you looking forward, you know, in sort of a collaborative way as well? I'll open that up to everyone. Go ahead.
It's very interesting thoughts there. I would agree and maybe have a little bit of a different take on it as well. I'm just looking back at what has happened in this space. What surprises me, what shocks me is the speed at which this new companies come in and just, just shake the bucket, so to speak. So, for example, there's a protocol called Yearn Finance. I don't know if anyone has heard about it. It goes by the term Wi-Fi. These guys, in the first year of startup, reached valuations or trades of about $5 billion first year. There's a fintech, which was a darling at the time when it's a Canadian company that has a similar business model, but it's a pure fintech that took 6 years to reach that same valuation. Today it's got AUMs of $15 billion, but what you're saying is that across this space, yes, right now we are we were the early darlings, we are the original fintechs. I consider FX as the original fintech, but if we are not careful, the speed at which change will come will leave us in the dust. So for example, look at Ethereum. Last year, reports are that it closed transactions of about $8 trillion into 2021. 2019, that was just $73 billion. Look at Uniswap, a decentralized exchange. Valuation went just in 2021 from 2 billion to a high of 22 billion. It's come down to about 5 or 6 billion. But what I think what we're seeing here is such rapid evolution, such rapid change, and firms like us need to see how do we look at it. Now, I think the advantage that we have, and that's where I concur, is that, for example, a group like HF Markets, just the size of my compliance team in head office is like a little. I think we can outsource it and do a separate business on that. It's a huge team. We understand regulations. We've got regulations in all the major centers around the world, apart from North America. We understand markets, regulations, AML, KYC, which is what I think the crypto space currently is suffering from, right? Now, if we can leverage that and join the party, well and good. But then the speed is coming so fast that I don't know what's going to happen in the next 5 years. It'll be very interesting to see the landscape. I believe that a lot of firms might not exist or might be overtaken by new kids on the block.
Yeah. Oh, sorry, Mohamad Ibrahim.
Yeah, no problem. So the crypto or the tokens and tokenization and this whole ecosystem is here to stay. Now, there's no doubt that some or many of the products or assets that are in this ecosystem might be bubbles, might disappear, there is a lot of things that are not clear how sustainable they will be. But the whole ecosystem is here to stay. The main motive, in my opinion, for this kind of rise or high rise is that the pandemic created a fear in all of us, the whole people. We're talking about the population of the whole world, that at any moment something might happen, I will lose my job and I will lose the ability to do business or physical business. So I want an alternative. I want something online. I want something to be able to do it from home. So this created that anything that's appearing in the online market, people are willing to give it a try. So that's why we will see some of these things are booming quickly, but then later on people will realize, no, this is not a sustainable thing. This is not the right thing. They disappear again. So what we do as a company, we try as much as we can to be careful with adding a new product or new assets. We need to make sure first that this new asset or new product is sustainable, is not just a bubble, is not just that will appear and disappear. From the other approach, we do not segregate ourselves as FX business or as CFD's business from this ecosystem. Our approach for this challenge is that every single individual in the company need to be educated and trained in a way to understand this ecosystem, to understand this new world, to understand all of these things, not having, for example, one specialized person in each department to handle this. No, every single person in the department needs to be educated and trained, at least to understand how these new products, new assets, new ecosystem work.
Absolutely. And sorry. Go
One
ahead.
thing I wanted to add is that the number one responsibility of a regulated firm is safekeeping of assets, and we as a firm, for example, and I think everybody shares this on the panel, that it is not that we wouldn't oftentimes want to add certain products, but if we look at our primary responsibilities, then if certain coin, for example, fails or goes to zero, then the regulators will be pointing fingers at us. And so that's kind of the reason why we need to keep the space clean. And I have to admit that the industry has been quite pragmatic and has acted quite responsibly as to this thus far.
Yes, and sorry, Derek, I've seen you come out of your chair a few times.
Yeah, no, I was just going to jump in because I think what you said at the very start, your question was, is it a competition?
No.
And yes is the answer. Everything
Okay.
is a competition. I mean, without competition, nobody enhances, nobody improves, nobody gets better. If I can use a very simple analogy of soccer, look at Liverpool and Manchester City right now. Liverpool are the old dogs, Man City are the new guys. They came in with lots of money, they spent very well, and they excelled. And now Liverpool are right back up with them by changing and becoming better, because you have to appreciate competition. I mean, does JP Morgan want Goldman Sachs to succeed? They don't, but they do want the banking industry to succeed. So if you look in the same way in the Premiership in the UK, football in the UK is now at the top of that level. So by embracing the competition that is coming from crypto exchanges, coming from firms who will evolve out of NFT, is going to enhance what brokers can do. Because if we don't get better, if we don't look at what they do, we won't improve ourselves. We'll die away. We'll become the banks of old, because brokerages have changed how clients trade, trading in the market, in the industry, and what they want to trade. And banks have had to try and readapt themselves to learn what we've done, to come back up and compete with us on pricing, on liquidity. And that's all a good thing. So, I mean, I think it comes back to a competition is good. Competition is going to be here, but it will cap it off. And again, the guys have mentioned regulation. Regulation is going to change the future also of the crypto space and the NFT space, because crypto or regulation in our industry has become so tight and is becoming tighter. We are, as I mentioned earlier on, we're one of the most regulated brokers in the industry, but with that comes a headache. But it's a headache that is only going to make you better. And it means that your processes have to be stronger. Your compliance, and one of the guys mentioned compliance teams and how big they are. That is what makes a broker very, very strong. And if you have that platform to build upon, it doesn't matter what comes in the industry. It doesn't matter what changes, because you will have an infrastructure that can learn and adapt. And then it comes back to technology, what I mentioned earlier on. So you have to be flexible with every one of those components to build a model that's going to last into the future.
I'm sorry, I want to add something, and I know you want to move away from this question, but I want to just confirm what Ingmar is saying, that they should be coming to our industry. And I think it's a competition at some level, but if you look at the technological side, crypto in the few years that has came out to live has surpassed all the technology that we have in our industry. But it seems they are coming into our industry. If you look now, there's a lot. Most of the major exchanges are already integrated with the major technology providers in our industry, Prime XM, 1.0, just to make it easier for all brokers to access these exchanges. If you look at that 2 years ago, it was very difficult to do that integration. So I think what Ingmar is saying is the right way to go about this. Is they need to go into our industry, and we need to learn from the innovations, and we need to learn from the technology that have used, because we have been very lazy in the last 20 years in terms of updating our technological systems and infrastructure.
Yeah, very interesting point about technology there, that now there's like, this sort of legacy infrastructure that's meeting this like totally brand new everything, new concepts, new technologies, new ideas. And Darren, you also mentioned regulation. So I think that the convergence of these two factors is really interesting. Like the old technology with the new technology, and also the old regulation, these regulatory systems that have been building through our industry, the last few decades, are meeting this entirely new field. And I'm curious, about all of your thoughts on that, just as we're preparing to take questions from the audience in just a few moments. Like, I'm wondering, like, personally, or, from the perspective of your business, what's the approach that you're taking toward meeting those technical and regulatory challenges? Go ahead.
Okay. Look, I'm saying again that regulation is a paradigm of our industry, and despite the headache that it comes with, and despite the requirements that you have to do, it is the solid foundation on how you build a brokerage these days. Ingmar, you mentioned the safety of client assets. I mean, it's almost something that you don't even need to say, because it is so important, and it is something that's prevalent in every single industry and every single jurisdiction. So it comes hand in hand with regulation. But regulation is looking at copy trading. It's looking at social influencers. And there are changes that are coming down the line that we are going to have to adapt with. That also, affiliation, which is a huge part of the industry, that's going to have to adapt, because we're not 10 years ago. We are, regulation has caught up, and regulation is going to change, and it's going to push brokerage into tougher and harsher conditions, which when you read it, and I look at legislation all day long, and it's boring, but you have to look at it and you go, okay, I got to see what the regulator is going to come with next year and the year after, and I have to be ready for it, because when it does come, if I'm not ready for it, then it's going to take me 2 years or 3 years to put the technology in place to catch up with it, because the regulators are investing in their technology. And even when we look at onboarding of clients, client identification, how seamless that has all become. You look at your phone and it's automatic, client identification. It's looking at a database, and straight away your client is verified within 30 seconds or within 10 seconds or whatever it is. And that has been shifted, that has been changed by the regulators, because the regulators have pushed brokers to find ways to do that. And then it comes back to if your broker can't do it yourself, you find technology partners that work with you. So it is a collaborative industry in that sense, that it's going to make us all better.
Definitely. And any more responses before we take questions from the audience?
Yeah, I could add to that. Regulation and compliance is something dear to me. Prior to taking my current role, I was the head of compliance for HF Markets. And I couldn't agree more that the focus that regulated firms such as ourselves, we're also extremely regulated right around the world, remains a priority. And as a firm grows, and especially with the type of explosive growth that HF Markets has experienced, it is a part of the business that requires more investments in terms of technology and people. Just make sure that you're keeping up to speed for the protection of clients, and not fall afoul of the regulator. Speaking on digital assets, I think it is a fragmented landscape. So you're seeing, for example, some areas. I think last year the Office of the Comptroller of Currency in the US authorized the use of stable coins in financial transactions by banks, and at the same time the UK's FCA banned crypto some type of crypto products to retail clients. In the UAE, we're seeing the UAE positioning itself, almost as a crypto hub. So we're seeing different centers popping up, trying to encourage and trying to take that first move advantage for this space. I think regulation is definitely coming, but users also have the choice to shift to where it will be regulatory friendly to them. Yeah. So it depends. There's some countries that will end up banning cryptos, some that are making it, it's nationally acceptable mode of payment. But change is coming, and it's just how we adapt to it that will determine success.
Definitely. Yes, Mohammed.
Yeah, I just want to mention that our industry is heavily relying on technology. It's a very technology-based industry. And there's interconnection and big relation between regulations and technology. New technologies and innovation in technologies triggers the initiation of new regulations, and new regulations raises the need of developing new technologies to be able to comply with regulatory needs and reporting needs. So it's all the time it's working this way. So the way we need to address this, same what we address different areas of the business, we need to always be ahead by investing into technology. The more we invest in technology and be prepared and be ahead, we will not got unprepared, and we will be able to cope and adopt with all of these changes. This doesn't apply only for regulations. We're talking about payments. We're talking about new challenges in the market. Everything, it's at the same level.
Definitely. Yes, okay, one more.
So in terms of technology, then one thing that we have been really focusing on is the data. And so if I take, for example, our marketing department, then we have a PhD, I think she's quantum physics or something, doing the analysis in the marketing department. So we are very sophisticated when it comes to where we spend our marketing money, and we spend in double digits, in millions on an annual basis. And when it comes to products as well, so we have our chief product officer sitting in the audience now. And the first question that he usually asks before anybody asks that, okay, can we add this or that product? Can you prove it to me? Or let's run a analysis as to what does the data show? And we have a brokerage team, for example. So we are analyzing trade flow on a per millisecond basis. Because I think in 2022, if you're not doing this, then you will literally not survive, especially with crypto assets, because the moves are just tremendous. And just final point on regulation, then I think regulation is benefiting the industry. So our industry will have long-term growth if there's proper regulation in place. And I mean, over the years, we've seen what bad actors can accomplish for the industry when it comes to specific secret brokers and so forth. So we actually embrace regulation, and even though we have offshore entities and we have a UK entity, Cypriot entity, then probably it would surprise everybody in the audience how many European clients we have under our offshore entities. So Tickmill today has 0 European clients under our offshore entities. We do not onboard any European clients to these entities. And we do this because the difference between us and many other brokers is that the firm is run by shareholders. And the shareholders have a long-term view, and it is not reasonable for us to risk maybe increasing the revenues 20% and then being shut down the next year. So we have a very, very long-term perspective, and I think that's one of the reasons why we've been successful. And of course, with some of the other competitors, we are for sure not making as much money on a per client basis or on a per trade basis. But we are looking at this again on a very with a very long-term view, because we know that when we keep our noses clean, then 10 or 20 years from now, we'll be making significantly more money than many other brokers, and half of the brokers maybe won't be even around. So I think regulation is the key in our industry.
Definitely. So we have time for just 1 or 2 questions from the audience. Okay, great. So I'll come over here.
Hello, I'm Tom Higgins from Goldeye Crypto Switch. Rachel, you mentioned the metaverse, and what I'm interested is digital assets are powering the transactions within the metaverse, and unlike the first time the metaverse happened, which is within Second Life when they had the Linden dollar, you couldn't transact that outside of Second Life. But with metaverses, the digital assets in there are actual coins that you can trade anywhere. And I was interested in what the panel's feelings were on the tradability of those and whether they were going to be listed and traded by brokers outside the many metaverses that will exist.
I'm happy to take that question. Can you hear me? Is it okay?
Yeah.
I think you've touched on it's a very interesting question. It's a very good and interesting question because I think one of the biggest, if I may call it that, unanswered questions with blockchain is the interoperability between multiple public and multiple private blockchains between themselves, and then the integration between blockchains and legacy systems, which I think is what you're alluding to. I think this is still in early stages. I believe that we'll get there at some point. But then I think what's required is a universally well accepted data standards. I think that as that comes in, as you get institutional buy-in, so it's a multifaceted area question, because you've got, for example, institutional investors need security of storage, the threats, for example, on the blockchain, like 51% attacks, network portioning attacks, that regulation, defragmentation. It's a lot of these things that I think will come together at some point, and then you'll have, hopefully, where you have assets that are there's a crossover of assets from the metaverse or from the crypto world into legacy systems. I think we're a bit away off from that, but it's something that we're probably approaching. I hope that's answered you in some way.
Yes, Dara, really quickly.
Yeah,
Sure.
I'm not going to answer your question directly, Tom, but I'm going to just give you my thoughts on the metaverse and how it will change the industry. I think one of the very exciting things that's going to come with the metaverse is around marketing in particular. And even if you think of the concept of property is owned now physically. In the metaverse, it's going to be virtually owned. And with that also comes marketing opportunities. But if you think of the Empire States Building, if you want to advertise, you put a big panel down the side of the Empire States Building. In the metaverse, you can do it, only you can do it in different countries. So somebody from Ireland will come and they'll see something about St. Patrick's Day on the side of the Empire States Building. Somebody in Mexico will see something about, the tacos. So within the metaverse, property and marketing are going to come hand in hand. And then with that is going to become transactions and how to trade within the metaverse as well. So even for brokerage and how we want to advertise, we need to think about that, about where our user base are going to be using the metaverse and looking at it and consuming it, and then how we can target in to leverage off that. And I think it's something that's going to, again, evolve. Who knows how, but it's going to be something that we're going to learn as we go it. But I think it's something that is, I think it's something that we need to look at very, very quickly, because the demand is going to come. And again, coming back to what I said earlier on, if you're not ready to meet the demand, you're going to fall behind. So I think that's my only 2 cents
We
on
have
it.
time for one more quick response from Mohamad, and then we've got to end the panel, I'm afraid.
Yeah, what we mentioned before is that we deal with people's money. So the safety and security of the funds of our clients is our top priority. This prevents us from jumping on any opportunity that might appear. So we need to wait a little bit, try to understand, analyze how safe, how secure, how sustainable. We still don't know. I think this will require some more time. Now we have metaverse. Maybe after a couple of years, we will have multiple metaverse. Nobody knows how this, let's say, parallel world, all these things will evolve. So in my opinion, and this is the approach that we're taking as a broker, we don't jump on any opportunity. We need to make sure to analyze it properly, wait until it's clear before we start going into that,
Yes,
that space.
definitely. Gentlemen, thank you all for this wonderful discussion. It was my absolute pleasure. Audience, thank you so much for your attention. Let's give our speakers a round of applause. Thank you.